The current portion of long-term debt represents the amount due on your long-term liabilities within the current year. Periodically, your accountant or your lender may ask you to move a portion of the balance of your long-term liability to an account in the current liabilities section of your balance sheet to represent the current portion of long-term debt. You can do this with a manual general journal entry, or you can use a feature within CenterPoint that will allow CenterPoint to calculate the amount of your long-term debt that should be in the current liabilities section of your balance sheet, and it'll create a general journal entry transaction to move it there. This makes the process of maintaining an accurate balance sheet easier for you, and it allows you to keep your balance sheet adjusted throughout the year rather than just through a manual adjusting entry done at the end of your fiscal year. As you can see, I have a balance sheet up on my screen, and you'll notice that under current liabilities, I have a section called current portion of long-term debt, where we have been maintaining the current portion of long-term debt for most of our loans. But you'll also notice down under long-term liabilities that I happen to have a mortgage on my horse barn for $295,000 that is not yet represented underneath the current portion of long-term debt. So we're going to work with that loan to show you how to set up a loan to calculate current portion of long-term debt through CenterPoint. So I'm going to go to Setup of Accounts, Set up Accounts and Accounts, and we're going to open up the list of accounts to that loan, and I'm going to edit that loan for the mortgage on our horse barn. When you set up an account in a long-term loan category, on the Detail tab, you're going to have some features that are optional, but they either allow you to calculate the accrued interest on that liability or calculate the current portion of long-term debt, or both. Accrued interest is covered in another video, so you would want to review that video for the accrued interest. So we're going to concentrate just on current portion of long-term debt. When you want to calculate current portion of long-term debt for an account, you need to have another account on your chart of accounts in the current portion of long-term debt account category. So you need one account per loan that you're going to calculate the current portion of debt for. To create that account, it would be easiest if at the end of this current portion of long-term liability field that you just click on the New button. So that's the easiest way to create it. And it'll create an account by the same name as your loan with current at the end of it, but it'll also put it in the current portion of long-term debt account category. If I'm using account numbers, I can go ahead and assign an account number to this account, and then I can save this. Now that creates the account. Now we need to enter in the terms of the loan. So you want to make sure you highlight whatever company, if you have multiple companies, whatever company that this loan is for. Then you are going to enter in the terms on the right. So we're going to first choose the interest type, whether or not your interest is calculated based off of you making equal total payments or equal principal payments. Mine is calculated based off of equal total payments. How many payments per year you have, the interest rate on the loan, and the beginning date of the loan, and then the completion date of the loan. Next, you'll click on the Schedule of Payments button, and that's going to bring up a screen that will have on it all of the details that you entered in on that previous screen, but what it didn't know yet is what the original balance of the loan was. So we're going to input the original balance of the loan in here. And then after all of the details have been verified, you'll click on the Calculate button, and it'll calculate a payment schedule for this loan, which is also going to include a column for current portion of long-term debt. CenterPoint is going to use this schedule to determine what the balance of that current portion of long-term debt account or to calculate what that balance should be. So we need to save this schedule and then save the setup of this account. And then we'll close out of account setup. Now you can see here that it still hasn't calculated the current portion of long-term debt yet for that account. There's actually a transaction that you have to run on a monthly basis, and that transaction is run underneath processes and periodic. There is an option for adjust current portion of long-term debt. Okay, when you go to the adjust current portion of long-term debt screen, then what you'll do is you'll click create new every month, and you'll want to select which company you're adjusting that current portion of long-term debt for if you have more than one company, and the date of the transaction. Now we usually recommend that you do this at the end of the month, because if you make a payment out of that current portion account during the month, we want to make sure that we adjust that amount back to what it should be at the end of the month. There is a sequence number for these current portion of long-term debt transactions, and you can also put in a memo line for each one of those and also a notation for each of the transactions, but that's optional. When you click OK, it'll take you to a screen where you can review the journal entries that are going to be made. So I'm going to open up the one for the mortgage on the horse barn. You can see here that this transaction will be decreasing our long-term liability and increasing the current liability for the amount that should be in current portion of long-term debt. If all of the transactions for all of the loans look okay to you, you can click post, and that creates the transaction. So I'm going to go back over to the balance sheet for a second and click refresh, and now we'll see on our balance sheet that underneath current portion of long-term debt, I have an amount for the mortgage on the horse barn. And then I also have a reduction in my long-term liability for the mortgage on the horse barn for that amount that was transferred to the current liability. Okay. I'm going to go back to that transaction screen for adjusting current portion of long-term debt. But if you wanted to get there from the menus, you would go to processes, periodic, and adjust current portion of long-term debt. If you had run the transaction for the month and realized that you didn't have the details set up for one of your loans, so it didn't calculate, you can reverse it out and recalculate it. You can do that a number of different ways. You can highlight this transaction and just delete it, and then click create new to recreate it. So that's one way. The other way is to highlight the transaction and click the recalculate button. The first option essentially does the same thing. It's going to reverse out the previous transaction and then create a new transaction that would include any new liabilities that weren't previously set up. Or it gives you a second option, which would mean that you leave the original transaction alone, but create an additional transaction for any liabilities that weren't included in the previous transaction. So those are some of the options you have for recalculation. This screen also allows you to highlight a transaction and click the review button to review the journal entries that were made with that transaction. I'm going to close that screen, and I'm also going to close the balance sheet. I do want to point out one more report that is important for these liabilities if you're adjusting current portion of long-term debt using CenterPoint. If you do it through CenterPoint, then underneath account balances, you can use the report called Consolidated Liability Balances. This report, if I preview it, will take and it'll tie the long-term portion account with the current portion account on a single line. So for that mortgage for the horse barn, I'm seeing the balances and I'm seeing a column that shows me the current portion, a column that shows me the long-term portion, and then it adds them together to give me what the total principal balance is on that loan. If you are going to go ahead and use this feature within CenterPoint to calculate the current portion of long-term debt, it is a monthly transaction. So it might be nice to set up a task for that to kind of remind you that that is a task that you need to run each month. So to do that, I'm going to open up a section for tasks, and I'm going to right click and add a new task. I'm going to give it a description of run current portion of long-term debt transactions. And I'm going to date it the first date that I want to run it. So that's going to be on 8/31 of this year. And I'm going to say that it's recurring. So I'm going to check that box for recurring and then click on the recurrence button. I'm going to say I want this to come up monthly, and I want it to come up on the last Friday of every month. If I'm not there on Friday, it'll go into the past due area, and then on Monday when I come in, I can run it then. I do want to attach an action to it. When that reminder or when that task comes up on my list of tasks here, I want to be able to click on it and have it take me to the screen where I calculate the current portion of long-term debt. So the action that I attach to it is going to be to go to Processes, Periodic, and then Adjust Current portion of long-term debt. So I'm going to go ahead and save that. And then that sets up a task on your list of tasks. You'll see under Due Later, I have a task to run the current portion of long-term debt transactions. When I do click on that, it does bring me to the screen to run the current portion of long-term debt transactions.